He is here to talk about survival. He has spent over half a century in the trenches of Wall Street. He has witnessed the panics, the crushing recessions, the euphoria of the dot-com bubble, and the devastation of the housing crisis. But he affirms that there is one enemy, the most persistent, ruthless enemy he has ever faced, that most people are woefully underestimating. Worse still, we invite this enemy into our homes. We let him sleep right inside our safes. That enemy's name is inflation. Today, he wants to have a frank conversation, stripping away the hollow jargon of textbooks, about how inflation is silently picking our pockets, why the feeling of, and quote, safety, and quote, in holding cash is merely a mirage, and most importantly, how to build a financial fortress to protect yourself and your family. He starts with the naked truth about currency. He knows we work hard. We wake up at 6 a.m., throw ourselves into the gridlock of traffic, endure pressure from bosses, from clients, and at the end of the month, we receive a paycheck. We tuck it away in the bank. We look at those digits, and we smile. We think, and quote, this is my wealth. It is safe, and quote. But he feels compelled to tell us the truth. That is a lie. According to him, paper money, in and of itself, has no value. It is merely a piece of paper printed with the faces of historical figures or pixels on a computer screen. The true value of money lies in its, end quote, purchasing power, end quote. That is, what it can be exchanged for. A loaf of bread, a gallon of gas, an hour of medical care, or a roof over your head. He emphasizes that inflation is not simply prices going up. That is the wrong way to look at it. The reality is, your money is shrinking. He offers a metaphor. Imagine you have a massive block of ice. That is your life savings. You place it inside a refrigerator, which represents a low-interest bank account. You think it is being preserved. But the refrigerator is broken. The temperature inside is always just above freezing. Every single day, drop by drop, the water melts and leaks away. You don't see it happen immediately. Day after day, the block of ice still looks intact. But come back in 10 years, 20 years, and what you are left with is nothing but a small puddle. This is exactly what is happening. He explains that governments and central banks possess a power that we do not. They can print money. When the economy hits a rough patch, they inject liquidity into the system. It sounds good, like a dose of painkiller. But when the supply of money in circulation increases while the amount of goods and services does not rise to match it, every single dollar in your wallet gets diluted. He invites us to look back at history. In the 1970s in America, a hamburger cost just a few cents. And now, you need $5 to $7. The $100 bill, once a symbol of ultimate wealth, is now, according to him, merely enough for a modest dinner for two. He calls this the, end quote, invisible tax, end quote. Inflation is a tax levied on those who do not know how to operate money. It hits the poor and the middle class the hardest, the very people who hold their assets in cash. And this leads him to the greatest paradox in investing. Why is, end quote, holding cash, end quote, the biggest risk of all? He understands human psychology. We are wired to seek safety. When the stock market bleeds red, when real estate freezes up, our first instinct is, end quote, sell everything. Go to cash to be safe, end quote. We feel a sense of calm holding cash. No volatility, no drops, no heart attacks. But he points out a concept called, end quote, silent risk, end quote. If you invest in stocks, the risk is visible. You see the asset value fluctuate every day. That is a visible pain. But if you hold cash, you are accepting a guaranteed loss. It just happens so slowly that you don't feel the pain immediately. He performs a simple calculation. If actual inflation is 4% a year, and he believes the real number is often higher than the official report, then after 10 years, the purchasing power of the money you are holding will decrease by about 40% to 50%. He asks us if we can truly visualize that. You work for 10 years, and half of that sweat and effort simply evaporates into thin air. He asserts, That is not safety. That is financial suicide. In his view, in the short term, end quote, cash is king, end quote, for handling emergencies. But in the long term, end quote, cash is trash, end quote. Holding too much cash is betting that the economy will not grow, that humans will stop innovating, and that the government will stop printing money. He argues that this is a bet history shows you will lose every single time. So what must we do? How do we protect our blood, sweat, and tears from this monster? His answer lies in a shift of mindset, from a saver to an investor. Your ultimate goal is not to accumulate the biggest pile of paper money, but to protect and expand your end quote, purchasing power, end quote. He advises that we must seek a end quote, positive real yield, end quote. Real yield equals investment return minus inflation. He gives an example. If the bank pays you 6% interest, but inflation is 5%, you are actually only getting 1% richer. But if inflation is 7%, you are becoming 1% poorer every year, even though the number in your account is rising. He says we must own, end quote, assets, end quote. We must turn our dollars into soldiers, march them out onto the battlefield, and have them bring back the spoils of war. Do not let money sit idle and lazy. But own what? This is the million-dollar question he wants to answer. Not all assets can withstand inflation. As a man who has seen many economic cycles, he shares 4 types of assets that act as the sturdiest shields. First, and his personal favorite, stocks of companies with, end quote, pricing power, end quote. He advises not to buy a stock just because the ticker is flashing green or red. Buy the business. During inflationary periods, input costs skyrocket. Raw materials go up, wages go up, shipping goes up. Weak companies will, if you are the best surgeon in town, the sharpest lawyer, or the most talented programmer, no matter how much the currency devalues, society will still have to pay you a level of compensation commensurate with current, end quote, purchasing power, end quote, to secure your talent. Earning power is the ultimate inflation hedge. His advice is to never stop learning, never stop upgrading your skills. He knows that what he has just shared might make young people feel pressured. The financial world is vast and full of traps. Watching the money you worked so hard for being threatened is not a pleasant feeling. But he advises us not to let fear paralyze us. The biggest risk is not investing and losing money. The biggest risk is doing nothing and watching your future be slowly eroded away. He reminds us, do not hold money, hold value. Do not run with the herd, get ahead of them with knowledge. He encourages everyone to start today. No matter how small your capital, start buying a few shares of good companies, learn about the market, or simply buy a book on investing. In his view, time is the best friend of compound interest, but the worst enemy of the cash holder. We are standing at a fork in the road. One path is the false safety that leads to slow poverty. The other is the rocky road of the investor, but the destination is true freedom. The choice lies in each person and Oppo's hands. He hopes we choose wisely. He thanks everyone for listening and ends with a call to action. End quote. Now, go to work. Make your money sweat for you. End quote.